Reporting. And joining me now, Richard Bruton, Minister for Enterprise, Jobs and Innovation, and Independent TD for Wicklow and East Carlow, Stephen Donnelly. Richard Bruton, to you first of all, do you accept the IMF figures? They're only projections, obviously, but do you think they're closer to the mark than those latest numbers we've got from the Department of Finance?
Well, I think, obviously we have to respect the source. I think what they are doing is what we know. This country has had bad policies for many years and they're not going to be sorted out overnight. But I think it also emphasises the importance of what the government is doing, and that's a decisive shift in gear, putting growth policies right centre stage, having an immediate jobs initiative in a mini budget to come up very shortly.
But your plan was based around a growth figure of 1.75%. Now you're going to have to look at something closer to half that, aren't you? In other words, the plan has to change.
Well, that's correct. The budget last year was built on a projection of 1.7, and we don't know at this stage the implications. Only one quarter gone. Last year, for example, the first quarter tax revenue was very disappointing, and it turned out to be quite good. But yes, the revenue, we can't be absolutely certain of the revenue, but what we do know is we can handle our own commitments. And the key crucial thing for government is to get its spending properly managed, but also to develop a growth strategy. And that is to tackle things that will make a difference to business. Getting the cost base right, getting access to finance and fixing the banks and getting a core bank, two core banks capable of lending, getting innovation and support for small companies back on track. That's what the core strategy has to be. Yes, you have to manage your spending, but you have to have much more than that.
But you're going to be short of cash, basically. It comes down to that. If the growth is something less, considerably less than what we thought it was going to be, where's the money going to come from?
No, if the growth is less, as last year, the tax revenue at the end of the year was slightly more, we don't know what will be the outcome this year. But I think the crucial thing under the Memorandum of Agreement is that we have to deliver what we committed to. So we have to deliver the savings in our public spending, in our public service pay bill. We have to deliver the changes. But we also have got a commitment, and indeed quite enthusiastic support from the IMF for the sort of growth elements, fixing our banks so that we now have a chance that the economy will...
But the point is that you had a plan based on a certain projection. That projection has now changed. That would leave most people would think a shortfall unless you have a plan B that will come up with more revenue.
Our commitment was to make certain savings in 2011, and the government have delivered those both in the tax changes that were made and in the spending changes. We now have to deliver on that agenda, make sure that those tax changes are efficiently implemented, that the spending is efficiently managed. There is nothing in what the IMF has said to us today that they have a sense that we're off target on any of that. Right. Their growth targets is one thing, but we are on target as far as they're concerned, and we need to change gear and rebuild this economy.
Stephen Donnelly, we're not doing anything wrong, seems to be what the government is saying. We're doing what we said we would do, but nonetheless we are going to end up short if it turns out that the growth projections of the IMF are correct.
We are going to end up short, and the revised projection down is extremely serious. What the IMF is saying is, first of all, you are not meeting your agreements under Croke Park. The efficiency gains are, you're not hitting your target.
Not yet, you're not.
Not yet. What the lower growth figure says is, not only are you not hitting the target, but the target's going to move. Right?
I'm not saying that.
Because, well, that's what I'm hearing saying is if the gap grows between what you're spending and what you're taking in, you're going to have to close it somehow, and therefore you are either going to have to increase taxes and or lower spending again. And therefore, the targets for public sector spending and efficiency inevitably will move if we're growing. The IMF has forecast that we're going to grow at 0.5%. My understanding is that is the lowest projection for an economy anywhere in the world for this year. It's an extremely serious situation. The situation we're in is this, is that our national debt is rapidly growing to be greater than our income. It's growing to be greater than GDP. We're paying off that debt at about 6%, and it looks like we're going to grow at 0.5%. So the economics are simple business economics. If you're paying your debts off at 6% and you're growing at 0.5%, something is going to break pretty quickly.
How do you make up the difference?
I'm not entirely sure you can make up the difference. I think inevitably the government is going to be forced to look at spending by the IMF again. I think we are in a multi-year process unless the government does something bold and does something with a bit of vision and a bit of creativity. I don't think we can. And if you look at what economists around the world are saying, if you look at what Joseph Stiglitz, Nobel economist, said a few days ago in the Irish Times, he said the path you are on is a path to default because, put simply, your debts are rising quicker, much quicker than your income. So what do? You do have to look at spending, but you also, I think, have to look at the total national debt. Now, I know it is easy for me, not in government, saying that, and it is a very serious thing for any country to do, but ultimately we're going to have to look at it at some stage.
Meaning restructure it, or attempt to...
Meaning restructuring.
Is Richard Bruton, isn't that the inevitability? That's the road we're going down, isn't it? We're not going to be able to do it.
Look, this is a difficult challenge. No one is pretending it's not. It's sickening to be in a situation where we're having to put money into banks to get things back on the road. But that's the position we are in. And a new government is taking decisive control of this situation. We are changing the way the banks have been managed. So we're going to drive those banks to put resource lending into our economy. We're going to introduce an immediate measures to stimulate employment. That is, the creative thing that Stephen is talking about, getting something happening in our economy. A loan guarantee fund I've introduced, proposing for SMEs. These are things that will make a difference. And Brendan Howlin yesterday announced, that we're now going to work on a long-term comprehensive spending review so that we get value for everything we do.
Nobody's knocking the effort, but what people like Joseph Stiglitz are saying is that the burden on our backs is just too great and that sooner or later we will falter and break.
Well, of course there are options. I mean, we would like to see a reduction in, for example, the interest rate that is charged, and that's in negotiation. That's clearly...
But on its own, that's not enough, is it?
On its own, that's not enough. That's a very significant change. We have to get a combination of things happening right. Getting banks working right, getting the real economy going again, building on the strengths that we have. Our export sectors are the envy of many countries. I mean, that's what distinguishes us from many of the other peripheral countries. We have a strong export base. We're one of the leading science countries. We are getting companies to come in and do their R&D here.
Exports are slowing?
Exports aren't
slightly,
slowing.
But they've slowed down slightly, haven't they?
No, exports last year was exceptionally strong. 10% growth in service exports last year. That was an exceptional performance. But we need to build. We need to do that. We need to get more of our companies getting into export
Sure, we know all that. But are you saying that if we do all of those things and we get the interest rate, that we will be able to meet our obligations under the bailout that we got from the EU and the IMF?
Absolutely. That's what we are determined to do.
I know you're determined to do it, but do you still believe that we can do it?
Well, there will always be examination of the sustainability of this, and that's what's going on. That's why the IMF...
Do you still believe we can do it?
I believe so. Absolutely, I believe so. But I think we need help in that, and that's why I think the negotiations that are going on, that Michael Noonan, I believe, is handling very adeptly to get a better deal in terms of the interest rates that we have, to manage our banking crisis effectively. Those are very important too. So it's not just what we do. We have to have an environment and a framework created by our European colleagues that helps us succeed, and that has always been our position.
Yeah, no, I welcome the jobs initiatives, and I welcome things like the microfinance fund. I think they're going to be important. But look, the figures are this. We are paying back our debts at 6%. Our debt is shortly going to be 125% of our GDP. So in order for us to begin paying it back, we'd have to be growing at about 9%. There is no initiative that the minister, with the best will in the world, can put in place that is going to give us year-on-year growth of 9%. That's what we would need. So we are faced with a situation which is this. We can make some very painful decisions now in terms of restructuring and not paying back the remaining 35 billion to the bondholders as a big step. It's a huge part. It's what it's got to do.
We can't walk away from our debts today and tomorrow look for another 15 or 20 billion to pay doctors, nurses and hospitals to keep going.
The problem is we're going to be walking away from them in 3 years' time anyway.
What is your solution as an alternative? We have to manage our affairs. We need money tomorrow to pay all our commitments to people who are working in our public service.
So my solution...
we have to raise that.
I agree.
I mean, talking about walking away from our debts when we know we have to borrow tomorrow isn't realism.
The problem is we're going to end up walking away from our debts anyway. That underlies this whole thing. And the analogy I use for the jobs initiative, which I encourage, is, we're putting a new sail up in the boat, and we're ignoring the fact that dark, freezing water is pouring in through the hole in the boat. Yes, it is a problem. It's not an easy thing to do. And as I said, it is a lot easier for me to say this than for you in government to do it.
I mean,
but it's going to happen anyway.
Default. I mean, can you give me examples of countries who default, who can go to the borrowing markets the following day and continue to fund, the sort of funding that we need to fund?
Argentina.
And where did they raise that money? You can't default on the borrowers today and go back to them tomorrow.
You can. They did.
Right. We have to leave it there. We'll come back to it. Richard Bruton, Stephen Donnelly, thank you both very much indeed for coming in. Now,
guaranteed senior bondholders, the new government's policy is to continue Fianna Fáil's policy. The government now talks about the Irish people not bearing 100% of the burden. That's the language that we're hearing in this House. Unfortunately, what the government is not